Well, hello there and welcome everyone to the Riches in the Niches podcast. I'm your host, Rob Jacomen. And guys, I'm super excited to have two absolutely amazing guests on the show today. And we're going to be talking about a really hot topic related to insurance agency valuations, exit strategies, industry niche specialization, fractional CFO models. We're going to talk about all those things that are really going to bring a lot of value to you as an agency owner, or if you're a producer or you're in the MGA space or carrier side. Guys, all of you guys are going to benefit from the content and the information we're going to share with you today. So I have Mike Mensch from Agency Brokerage. He's the CEO and partner. And I have also Colby Allen, who I have obviously a standing relationship with you, Colby, and you and I have been kind of hanging out with for a while here and building our relationship. So I'm super excited to have you guys on this show and just add enormous value to the industry, and especially what you guys are already doing. So I've been following your content. Colby, I mentioned to you, you've got some incredible value to share with this industry. Mike, I watched and looked at your content. You guys are just dumping enormous value into this industry. So guys, why don't you do this? Before we dive in, share a little bit about what you guys do, your mission, your purpose, the problems that you help to solve for the industry, and who's an ideal client for you guys as far as like who you serve.
So we are Agency Brokerage. We are a sell-side M&A advisor for the insurance distribution space. So independent agencies, some MGA wholesalers, programs, those types of things. Our ideal client is an owner who actually wants to optimize their exit. And so Mike founded the company quite a number of years ago, and he can give you a better history. But we are a business broker who focuses and niches down, right? So will kind of ring to your heart, niches down to work solely with independent insurance agencies. And what that does, it allows us to really get deep, really serve them in the way that, we know their business, we know their model, we know what they do and how to best position them when it comes time for their exit, to put them in front of the right buyers, right, to find the right opportunities. And we'll probably touch on this later, but niche agencies hold a unique position in that it's either very risky or it's something that's very attractive to a buyer. And so I think what you do is extremely valuable in how you help them establish those programs, establish what they do in their expertise, which can actually yield tremendous value for them when they actually get time to exit, and they want to start engaging in that conversation.
Yeah, we'll dive into that because I have some theories and some hypotheses to share with how I think somebody should, and I want to hear you guys, what your position is on this and how you should build out what I call these niche silos, these classes of business that you can start to build and, build out these silos and build unique niche programs around. But Mike, you have an amazing story of how you started. Share. I'm always fascinated by this because every time I talk to a new guest, I always wonder, how did you start? How did you begin? How did you start? What was the whole beginning of your journey on this path to get to where you guys are today? I'd love to hear that.
Okay. It's been a lot of years, so I'll try to do this faster version, but I started down the path of going through engineering. So I actually was working on a PhD in chemical engineering and then did a complete switch in careers. So my dad was a physicist. My mom was in banking, real estate, and then she got into M&A at the end of her career. So I always say I followed my dad in the beginning. Then I realized people always tell me you're not really an engineer because it's a certain personality type. So I finally realized that. And then I followed my mom into the M&A space in about 2006. Which was probably the worst time to get in because that's when the financial markets crashed, like shortly thereafter. But we got a referral for a client that had an agency probably around 2007 or so. And through that process, I just looked at the landscape and, you had the investment banking firms, the national investment banking firms on the high end dealing with all the larger agencies, but you really didn't have, it's really fragmented who was serving the smaller agency to mid-sized agencies. So it was an opportunity, and our objective was always to bring the service and sophistication that you see with large investment banks serving the larger clients down to the small and mid-sized agencies. So that's always really been our goal. And it's kind of the reputation that we've built is that we do an exceptionally good job with our clients, very attentive to detail. So, that's how we got into it, kind of stumbled into it, looking for, just like anybody looking to build a business. We found a niche, we found a need. And since then, I got licensed. I have P&C and life and health license. I actually ran and sold an agency at one point. So I'm much more deeply entrenched into it over the years. but it's an amazing industry. You know, it was for us, it was a great one to stumble into. But roll forward 17 years, and you know, we've helped on over 500 M&A transactions, done a couple thousand valuations, and now we've got a national footprint. And in terms of on an annual basis, we're probably number 3 in terms of number of deals that we transact and representing clients going to market. So told you before, like I have more books in my house on marketing than anything else. I'm 100% into niche marketing. We'll get into the value for agencies to do that. But, you know, that's the path that we went from a generalist to a specialist. And it's been very fun and very rewarding for us.
Well, you guys are a product of the product. I mean, you practice what you preach. And by the way, Mike, just so you know, there's a lot. It's a badge of honor to be a nerdy engineer because I am just like you. I always call myself the recovering engineer.
That's exactly what I say.
That's exactly right. Because I used to be an environmental engineer for years. But here's the thing: it served me really well because I came into the industry, and I know we'll make this about you guys, but I came into this industry from the environmental health and safety standpoint. So I worked in the industry for years and then brought that expertise and brought that experience on the risk management side, got into commercial insurance. And it was like a perfect fit because I could work on those really large, complex risks and understand all the moving parts and, you know, really add value to that relationship with some of those larger middle market accounts who had a lot of problems that we could help to solve. So it sounds to me like you guys are in the same situation as far as specific problems that you help to solve. And that's actually where I want to start. And I think this is really interesting because anyone who's watching and listening will probably gain more value from the next few minutes because here's the thing I want to focus on. What is the number one problem that you guys see right now in the insurance industry space, specifically on the independent agency side? What is the number one problem facing agencies today when it comes to this whole idea of M&A and exit strategies and valuations? Kind of bottle it up or take it wherever you want to go. And you can take it step by step if you want, but I'd love to hear what is the number one problem facing the industry right now?
Colby.
I mean, opinions, right? Probably different experiences and perspectives, but I know oftentimes when I engage with a CFO client, or someone who's looking to really dive deeper into what they have and how they can best optimize it. Not uncommon, and it's not necessarily exclusive to insurance agencies, but I think business owners in general, or even in our personal lives, planning for the future is just an oversight. And so there are a lot of people that, you know, with good purpose, but they make assumptions as to what the process is or what potential value can be for their agency. And if you don't actively engage in that process earlier, you know, you might wake up one day and realize your assumptions may not be fully correct. And so a little bit of planning, a little bit of engagement to learn the process, what it is, what's involved, and how you can best take advantage of it is huge. So not to say that you can't sell your agency for good value if you don't, you know, engage in that process. That's not what I'm saying. But if you actively engage in it early, you know, 1, 2, 3 years, if not more, you know, there are small decisions that you can make that make a huge impact over time. It's
amazing. Hey, Mike, so this actually is a great segue because I'm kind of thinking about myself and my own situation. So I launched I've got a few businesses that have a very similar offer, but one in particular is something that I actually ran through and I really sat down and strategized on this, and I ran it through ChatGPT. I had some prompts in there that I was like, here's how I want to plan this new venture. And I went into it from the very beginning with the idea that I could have potentially 2 paths. Number one is cash flow, build, grow, and scale the business, and just kind of like create a business, a productized service where it wouldn't require my day-to-day in like hands-on involvement in the day-to-day operations, but I could play the role of a CEO and kind of oversee the team, oversee the sales, oversee the operation side. So it doesn't require my presence. The other direction would be to start thinking about, okay, how could I set this business up to be a sellable business? And obviously the insurance industry in general, like if you're building an agency, you're building a sellable asset. You're building something for the future. Either you stay in it and you kind of ride the wave, or you start planning for, all right, this is what it looks like 5-10 years from now. and I'm setting this business up right now to have an exit strategy. So Mike, talk a little bit through that process, because you have a lot of experience with these two paths, but I'm kind of guessing that most agency owners don't think about and plan for the exit strategy because it seems so far and distant away. Is that an accurate assessment, or am I off base?
Yes. I'll tie both those questions together. So there's two answers to what are the big issues, that we deal with. So, from a universally across the industry, one of the biggest issues right now is labor, like finding good people, retaining good people. And we know there's a shortage of people in the industry as the baby boomers retire, who a lot of them are agency owners. It's creating a shortage of talent. And then also, so we sat down and a couple of years ago, like a year or two ago, and we said, what are the recurring issues that we keep finding in agencies that, affect the growth and affect the value? And number one is owner dependence. The agency is too dependent on the owner. They're either the key producer, or all the controls and all the decisions and everything flow through them. So there's no delegation of duties. So that's the number one thing that inhibits the growth of an agency. So I tie that into what you're saying, because you're saying, there's two models, right? You either, if you're building a specialty practice, you either are the leader of that specialty practice, or you develop somebody to be the leader of that specialty practice. And the difference is, if you are the leader, then the business is dependent on you. If a lot of the knowledge, relationships, and all the things like that are in your head, when you go to exit it, you're going to have to stay involved much longer, because the buyer's going to have to work out, how do we transfer that knowledge and relationships and everything to somebody else? So you do want to plan that in advance. One of the most successful clients he had a generalist agency, but he brought in one or two industry specialists, and he let those guys build their own little vertical within his agency. And so I think that's a great strategy, where you bring in somebody that's a practice leader, let them take the lead, because as an owner, then it's easier for you to exit, because now the talent stays there, especially if you hire somebody that's younger. But there's, we'll get into talking more about the value of a niche practice, but if possible, you want to not be the person that maintains all the knowledge and relationships and everything, because that makes it a little more difficult to extract yourself.
So if I'm understanding you, one of the things that you would advise, and Colby, you can hop in here, or Mike, one of the things you would advise any agency owner right now is to start having these conversations, start having these strategy sessions where you're sitting down and saying, okay, what's the vision of our agency? What's the future look like? What areas do we need to capitalize on? How do we leverage human capital to our advantage? And how do we tap into an opportunity when the industry right now, because I could go 100 different directions with this, but I wrote this down, the lack of talent in the pool, I see as an opportunity, whereas some might see it as a potential liability. And if you're a really enterprising agency owner and have that entrepreneurial spirit, you look at that as an opportunity. Would you guys kind of agree with that there's tremendous opportunity right now for anyone who has that entrepreneurial spirit in the industry? It's like a blue ocean. If you know the right strategy, the right marketing, the right industry niche specialization approach, all those factors could play into how you really strategize about the future. Is that an accurate thing, Colby?
It is, yeah. And I'll even share a recent trend that I've seen emerge and becoming more common is kind of to add to what Mike is saying. A good agency owner is going to really sit down and plan, what are my goals? What is my roadmap? And then who are the people I need to bring on to make that plan happen? And it's not uncommon now for growing agencies that are needing to add management staff or some type of executive level staff, right? People that are going to oversee the operations and the direction of those that are reporting to them, to hire from outside of the industry. Because it's such a challenge to find, a COO or a CFO from another agency that you want to poach. And so they're actually going outside to other industries like retail, telecom, manufacturing, to find people that have the skills that they're trying to apply, bring them in, and then have a good onboarding and ramp up process for them to learn the industry. Because one, you can find the talent in other places, but two, it also is a way to get fresh ideas to, look at things you haven't done the way before, or try to find new approaches, right, for either growth strategies or marketing that they haven't been using before. And so actually you asked about ICP earlier. A lot of times an ideal CFO client for me is someone that has either a controller or an operations manager from another industry that we can work alongside, and we can actually establish the things that we're going to do together, while also have like a training or ramp up period for them to learn the industry and how it applies, to take their skills and apply it to the agency itself. And good owners, right, recognize that. That is becoming more. I've probably had 3 to 4 engagements over the last year that was the case. And so I think that's going to become more common. Like I said, as the talent need continues to kind of progress. So people are getting creative, right? They're realizing that we don't have to stick within our industry to keep the talent here, but to find other more innovative ways to fill those needs.
Let me piggyback off that. So you're talking about bringing in executives from other industries and training them in the industry. But if we're talking about niche marketing, if you want to develop a program for FedEx drivers, go hire somebody who is like a sales manager at a FedEx office or something like that. There's somebody that's in the industry, teach them the insurance side. And then, the agency is already established and everything. You've got the processes and everything to plug behind them to do the marketing, help them to get the program set up. But they can already speak the lingo of that industry. You just have to teach them the insurance side. I mean, that's a great way to go and bring in new talent into the industry and also solve the problem of how do I build a vertical in this space when, we don't know anything about it.
Yeah, it's fascinating. I know that we talked earlier, and what I think was most interesting to me is you often hear this thought of, it's all about lead generation. It's all about marketing. It's all about attracting the right prospects into your pipeline as the problem to solve. But what you guys are telling me, and what I'm hearing you say, is really the talent pool in the industry is a real problem. And it's a real problem that needs to be addressed. And it's also why you see a lot of agencies who are going overseas and bringing on these experts who are VAs, who are already have expertise in insurance, who can do a lot of the back end office operational stuff that you don't want as a producer or an agency owner. You just don't want to get in, you don't want to be involved in that day-to-day stuff. I always say that for producers, that getting involved in the CRM and worrying about applications and getting all the minutia is like the sales prevention department. You shouldn't be doing those things. You should be leveraging the talent that you have so that you can focus on your gifts and talents. I think that's a big takeaway too, is I'm in conversation. I know this is kind of a sideways thing, and I'd love to get your guys' take on it, but I'm in conversation right now with a young guy who's starting a new agency, and he's asking me questions, and I'm kind of advising him in a way without any thought of him doing anything with my business or anything like that. I just want to give back. Like, I want to give to him and help him succeed. I want to see him win. But he sent me a message the other day. He's like, I find myself working on all these things like SOPs and planning for the future. And he's doing all the stuff that is making him comfortable, when I'm like, dude, you just got to buckle down, go out there and get some wins. Like, first off, pick a niche. Go all in on it. Don't have FOMO. Don't worry about missing out on other businesses that you could go after. Just focus on one silo that you can go after and dominate, and start building your pipeline, because you need wins, man. Like, you don't need to be worrying about SOPs and who's the next hire and all that other nonsense. You need to be focused on filling your pipeline, adding value to the industry, learning those industries inside and out, and becoming the go-to expert. So what would you guys advise as a brand new kind of building in this blue ocean of agency ownership? What would you advise that person so that they become a great client for you guys in the future?
I'll even throw a challenge out there to kind of piggyback off what you said. It's hard to develop SOPs when you don't really have an established client base. Because
100%.
what you don't want to do is put up frameworks or guidelines on how you're going to service a client when you don't know what service that client needs. And so I think you do need to kind of establish yourself with a little bit of momentum, right? Who is your client? What do they need? And then you can really start to kind of flesh out some formalities on how you do that better. Kind of to that, and maybe to add something else too, is like Mike said, agencies will hire like a practice leader to come in and grow something. My experience, I've worked with producer teams across the country, different levels of success, and also verticals or different practice groups. The most successful producers that I've ever worked with usually came from another industry serving some other capacity. So oil and gas producers often were landmen, right? They manage leasing. And so they know the industry, they know the space. and they know the coverages and the business needs. One of the most successful transportation producers used to be a DOT consultant, right? So he knows what they need and how they need it. And so know the industry you're going to serve, and then that will empower you to actually set up SOPs or policies and procedures and the resources that are actually going to help you deliver more value to those clients. Not to say you can't do some basic stuff first. You kind of need some direction. But yeah, I'll agree with you. You shouldn't really get muddled down in the mud or the details before you really know what you're
first, before you start planning for how you're going to deal with the flood.
Exactly. Right. Just go out there. And my last piece of advice to him was make a Dream 100 list. Okay. Pick a niche. And he's picking trucking. I said, great. That's awesome. Is it long haul trucking? Is it, local short haul? I mean, you're talking about Amazon contractors. I mean, who are you talking? You're talking livery. There's so many different places you can go with that. What specifically, get very, very crystal clear on who you serve, develop mastery of that class of business, because then you become invaluable. Then you become an invaluable resource for that business owner. And I'm going to challenge you guys for something real quick, because this is actually, I don't think this is ever done or talked about very much. Oh. So imagine, I always say this, imagine yourself sitting in a boardroom with the owner of a trucking operation. Let's just say it's a $50 million trucking operation. And you've got two agency owners who are also kind of play a hybrid role. They're producing too. They're building relationships. They're out talking to building their business. And one guy has that expertise in trucking who is not the incumbent. The incumbent is actually a generalist. And they're both sitting across from that owner. Who do you think the owner secretly wants to be working with more than anything else, knowing that he has a 5 or 10 year relationship with that incumbent and probably met him at the golf course, or he was referred by his banker, or whatever the case may be? But who do you think has a better chance, so long as they create their value proposition and really put forth a very solid argument for why they should have that opportunity? Who do you think the guy wants to work with most?
Yeah, the specialist. And the job of the specialist is to point out where the generalist is missing. Did they do this? Did they do that? Like, you have this coverage. Going back to what you said at the beginning about it was a younger guy who's laying out a plan for growing. I mean, if you're new and getting in, the best thing you can do is specialize, because think of it like, I would say, generalist versus specialist is like, think of a manufacturing line. If you're a specialist, you're just a continuous production line. This is the engineering coming back out. Mm-hmm. You're a continuous production line, right? If you're a generalist, you're these batch processes where okay, this is a restaurant. Let me go look up how to do this one. Okay, this is a retail office. You got to constantly be slowing down. But if you're young, your learning curve is a lot faster if you just stay in one lane and learn the ins and outs of whatever vertical you're targeting. So I definitely think somebody newer coming in should find a specialty, and it doesn't have to be 100% of what they do, but try to make it eventually 100% of what you do.
Yep. It's so funny because, and Colby probably knows who I didn't have a tiff with this person, or I just had a fundamental disagreement with the approach. But I kind of have this approach where I think the fastest and easiest path to success, and we can talk about how this affects and impacts valuations in the future, but I think the fastest and easiest path to success is commit to a niche, specialize, master it, and grow and scale that specific class of business. Then when you're ready, you can always move on to another sub niche of a vertical. That's common. For example, I always use this as a great example. Let's say you want to go after artisan contractors, and that's become, it's a very competitive marketplace right there. Everyone wants HVAC contractors, plumbers, mechanical contractors. I always said that I loved working with those guys because they're loyal. It's a great risk. There's lots of nuances to those types of businesses. They've got vehicle exposure. They've got all kinds of different things. There's a lot of moving parts. I always loved working on those really hairy accounts. But if you can imagine, if you make a decision to specialize in one of those for now, and then knowing that there's always that possibility that you could migrate once you learn how to scale one, isn't it then easier to scale others when you've okay, I've got the SOPs, I've got the systems, I've got the process down for this particular niche. Now I just model and duplicate what I did here and build a new one and build another one and build another one. And that's how you scale. So the difference of opinion I had with this one individual was, I'm a big fan of specializing. And then this guy was saying like, no, a brand new producer should be a generalist and work on everything and get a broad experience. I fundamentally disagree with that. But the one thing I did agree with him on is that agencies generalize, producers specialize. Yeah. So if you have multiple producers, you want them focused on specific industry niches or target classes of business and have them scale those so that as an agency as a whole, you have these specialty areas of your business and these specialty practice areas that make you more successful because you're able to silo those and build them and scale them. Would you guys agree with that approach?
100%.
100%.
How does it impact valuation? And I guess we can go down this road right now. This is like in your wheelhouse. This is your bread and butter. How does that model impact valuation compared to the generalist agency model? And the follow-up to that is, I want you guys to talk a little bit about the difference between personal lines, mainly personal lines driven agencies versus the commercial lines driven agencies. And what are the differences? Because I always say a personal lines policy, $1 for $1 is not really comparable to $1 for $1 on the commercial side. Commercial insurance driven agencies are way more valuable. And I could be completely wrong. Maybe you guys can tell me if I'm wrong or not.
I'll marry something that you teed up, something that's in part of my experience with the agency value itself too. So yes, whenever you are able to position yourself as a specialist, one of the biggest complaints that most agencies have right now is the lack of appointments and the difficulty to get appointments. Okay. And I tell people all the time, the reason that is because when the carrier or the program asks you for the application for the appointment, do not lie to them. Do not fudge your numbers. Tell them the truth, right? Because they're looking for ways that you're going to demonstrate you're actually going to benefit their program. If you have a proven track record of specialization and producing in one space that they want to either get into or a new space that they do well, but you are showing the expertise to be able to do it, you are exponentially more likely to get that appointment than if you were just to be a generalist agency. Hey, I just need markets. I just need access to be able to write business. A carrier hiring a producer or an agency is no different than an agency hiring a producer. You want to align yourself with someone who's going to drive value for what you're doing. Okay. So you got to produce, right? Mm-hmm. So as an agency, you need to be able to position yourself as a valuable producer to that program. And the more you're able to do that, easier it is to get those appointments, the easier it is to drive growth, and the easier it is to drive value. And so I used to actually do that process for a large agency, requesting new contracts, filling out those applications. I did the book of business roles and transfers when we acquired agencies. So communicating programs is part of where I come from, right? And the producers that actually can demonstrate, validate, and show on an application or a conversation with that marketing rep, hey, I might not have experience in this space, but I've got a proven track record of producing in 2 or 3 other spaces, and I'm going to do that here for you. Are you more likely to hand over that contract or not?
100%. It's no different than looking at the business owner and him seeing a generalist and a specialist. Who do you want to work with most, right? Who do you know is going to actually provide value to? And it's the same on the carrier side. Here's actually a really interesting question for you, Mike, because I want to go down this road. This is really important because I agree with you. I work with several clients in California. California is a very challenging market right now. They both expressed to me, there's 2 guys in particular I'm thinking about who both expressed to me how hard it is to get appointments, and that, a lot of carriers are just like, they're not very motivated to do a lot of business in California for a number of reasons, which we won't go down that road. But here's what's interesting. The ones that are specializing are able to also build relationships with the right MGAs who are specialists in and of themselves. So what they did is they're finding those MGAs and those agency partnerships that can help them build their own specialty program in that niche and help them grow and scale faster because they have access to the right markets who already have that appetite and who already specialize. So what are you guys seeing as far as the future of the carrier agency relationship in that area of specialization, and how does that impact a buyer looking at the fact that that agency has those different programs in place and is a real specialist? What is going through in the minds of a buyer of that agency when they see something like that? Loaded question.
Mm-hmm.
several moving parts, but I think is extremely valuable.
Okay, now I got to break down your question.
All right, let's start with the first one. The first one is, what is the value of an agency and a producer building these relationships with very niche MGAs, wholesale brokerage operations, as well as on the carrier side? Like, for example, Travelers, when I was in the fire protection contractor space and in that niche, Travelers had a fire sprinkler contractor program. Okay. So they could write everything. They could write all lines, so long as, obviously there's some nuances to that, but they could write all the lines. So then you had your standard carriers, but then you also have, there's MGAs and there's program business, and there's all these different opportunities for an agency to build their own kind of micro programs, but then have these relationships with all the right carriers who can support their goals of building that industry niche program. So let's start with that. What is the value that you guys see in those relationships with the carriers, and how that affects appointments and opportunities for an agency?
I'll try to tackle that question. So, from the carrier side, if they're a specialist, they're going to underwrite it better, right? So that generally should lead to better underwriting profitability. The retention is going to be better because they're an expert and that's what we always see is niche agencies have higher retention. So you're saying the example of if they build a program for a carrier, what's the impact in the valuation? So what we see is niche agencies usually have better growth, better retention, better profitability as a business operates. And if they've developed a program with a carrier and they have a sizable volume with that carrier, there are buyers that have their own programs, which they can take that program and plug it into their own wholesale relationship or their own underwriting entity. And so there's arbitrage that they have. So, we've had clients that had programs like this, and one of the buyers just came in way over the top of everybody else because they said, "Oh, we're just going to take that program and stick it in to our MGA, and then we're going to increase the margin that we get off of it." So for that specific question about if you develop a program with a carrier, there's a lot of strategic value to specific buyers that is not going to show up on the P&L of that agency. But the agency being a niche in and of itself is probably going to have better growth, better retention, better profitability, and which translates to a higher value multiple just on the agency. And then tag on to that, you go find the right buyer who then can take that program, plug it into their own MGA. You're going to get an even higher valuation. And we had two clients that were like that, and the offer we got from the right buyer was like 25% over everybody else, and the other offers were all really good, but because they had that program, then it just shot the valuation even higher.
Man, so I always say this, and I could be very extreme. I could be on the other end of the extreme. People could probably think I'm kooky or crazy. I really believe the future of the industry in general, especially on the independent agency distribution channel, the agency of the future are going to be specialists. Even though there are some who do a really good job and are phenomenal, but I think there's going to be the trend. I really feel like I could be wrong. I feel like it could be an 80-20 thing right now, where there's a very select few agencies that are specialized, and most are what I would say in that 80% generalists. I would like to see a day, and I think this may happen, where they kind of flip that script, and there's going to be more specialists because business owners want to work with experts who understand their business and industry. And I think that's kind of where, look at the medical industry. Look what happened in the medical industry. Yeah. All these minute clinics popped up, right? Yep. Guess what happened to the primary care physician? The primary care physician is pretty much a dinosaur right now. And most of the jobs in that space are run by nurse practitioners, physician assistants. You have minute clinics. Who is making the most money and who actually has the most value? It's the specialists. It's those orthopedic specialists. When you have an injury, you want to go to somebody who specializes in shoulder injuries. So it's like that nuanced and that specific. And I think our industry is kind of headed in that direction. We're just not there yet. So would you guys kind of agree with that? Or am I as kooky as a lot of people think I am?
Well, I would say, if you look at so you've got all these legacy businesses, like there's, the vast majority of agencies have been around for many years. And so they were built on the brick and mortar. A lot of them were built off a brick and mortar local agency model, which is great. And it worked. But the world has changed a lot in the last 5 to 10 years. With COVID, everybody became much more comfortable with working with people remotely on Zoom like this. And so that's part of it. The other thing is all the aggregation of volume with these large brokerage houses that have a lot more resources. So it makes it, on commercial accounts, it makes it more difficult for the local agency to compete with a bigger agency because they got HR compliance officers, they got claims adjusters, the big brokerage houses. So to be competitive, you really should specialize in the environment now where everybody's getting more comfortable with working with advisors that are remote and maybe not in their local area. It's definitely creating an environment where we're seeing more agencies, especially younger ones, that are going after niche markets and scaling that way. So I think it's moving in that direction. I don't think it's ever, it's a great strategy. It's a smart strategy that people should do. I don't think it's going to be a universal thing. There's still going to be a lot of local agencies because that still fills a need, for the communities that we have. But it's definitely going to grow.
And there are, I know we've been saying the positives. I think there are some inherent risk that we probably should just touch on so that people that may be considering it to think about.
100%. I want to hear both sides.
Sure. So it's high growth because it's also high risk, right? So you might be concentrated with, say, like one carrier or one paper for your program. If that doesn't perform the way they need it to, or they have a change of appetite and want to shift or realign, they might pull your contract, right? And then you have to find new paper. That happens all the time.
All the time.
All the time. And so it's not just a cash cow. It's a business that you have to set up and run. And if you don't market yourself well, you may not get the flow either from other producers, other programs that are trying to find the product that you offer. And so I've seen MGAs that get to a certain level and then they also don't grow because they don't really set up a good business, right? They've got a good product, but they don't market it well. And then there's some that do both extremely well and they just prosper, right? They've got a great product and they have great marketing. And so they're going to beat the pants off all the competitors that are trying to compete with them. So there is some risk, right? So it's not all just a gravy boat. It still requires good business acumen, good business planning, good skills to actually manage that program well, because you can see the inverse where somebody starts a program, they get a little loose in underwriting, and then 2-3 years down the road, they got to swap paper because they put bad business on the books. And that would also show in the performance of that program long term if they don't manage it. It's easy. I don't say easy. It's not hard to find opportunities, but it's still a company that requires intentional strategic planning for maturity. We'll say that. And to kind of also call back to a question you mentioned earlier about personal lines and strategic buyers. And so to kind of add to what Mike said, an ideal buyer is going to look for a program that either complements or can add other intrinsic value other than just the P&L. And so if you intentionally position yourself that's attractive or would be, something to catch someone's eye to add that type of intrinsic value, that's where you can find those types of offers. Yep. So like a personalized example, right? An agency that I worked to acquire years and years ago, the agency I worked for was a $125 million agency. We were top 20 in the country, did a lot of things very well, but there was one particular product. We actually, in the span of like 3 years, we acquired 3 different programs. There was one particular product we did not do. And so in order to get into that market, we couldn't get the contracts. So we had to go find someone that did and try to lift them out and bring them into our agency. And we did. And other than just those producers' books that had the relationship with that contract, that also opened up the avenue, kind of like to, even like Mike alluded earlier, other producers in the agency that had those opportunities in the past, but didn't have a place to put it, was a significant flow of business for that program other than just buying them, right? And so it's not just, again, the value that's on the P&L that you're going to acquire that cash flow, but what are the other things around that you can likely try to position yourself to add other value that someone might find more valuable? That could be complementary program. It could be something that they might not do and want to get into, right? There's different ways to approach that. And again, you can't plan everything, right? You can set a plan and roadmap in place. Doesn't mean it's going to execute perfectly, but trying to look ahead and see, okay, what are the decisions I can make today that might have that type of impact? How can I best position myself? There's nothing to. One of the best clients I ever worked with, they left a larger agency to start their own. Their exit plan was to build up a book of business that modeled the agency they left so that they can resell it back to them as a retirement plan.
That's
right?
Brilliant.
And they were doing it very well and still had a relationship with that other agency, went off and they were building a book, and in less than 5 years, built up a book that was over $1 million and were in active conversations to resell back to the agency they left, right?
It's
So,
fantastic.
but it was the knowledge and knowing that agency's model, what they like to do, how they set themselves up, that they kind of knew how to position themselves to be at that opportunity.
It's awesome. I want to say something controversial because I want to shift gears for a second. I like controversy. I like the little bit of this contrarian views and
Okay, but nothing political though.
nothing political. Nope, definitely not. I want to talk about and shift the focus on valuations and the importance of understanding where you are right now and having a realistic perspective, kind of like a reality check. Because I think there's a lot what I'm seeing online, and I see a lot of chatter about this. There are these assumptions that people make about, oh, this is what my agency's worth. And Colby, you brought it up the other day, where someone might say, well, I can't really put a value on my agency. It's something that doesn't necessarily, it has intrinsic value to me, but it's just something I can't possibly place a dollar value on it. But then there's others who are just so unrealistic in their expectations. How do you guys manage that expectation? Well, let me ask this first. What is the importance of doing an evaluation on your agency right now so that you have clarity on what the true value of your agency is right now? And the reason I'm asking that question is because years and years ago, I interviewed the owner, the founder of a platform that does valuations for the financial services industry. And one of the things he told me is that 85% of the market in the financial services space, they have no idea what the value of their business is. They have absolutely no value because they've never gone through a valuation process. And they're making assumptions in their mind about what their business is really worth. What do you guys think about everyone doing, at least having a foundation or a baseline to work from now so that they have realistic expectations in the future and they know the chart, they can chart the path much more effectively by knowing where they are right now and saying, okay, if I get to here, this is what I can expect my valuation to be, and use that as a planning tool as well.
Go ahead, Colby.
Okay. So the image I love to use is for an insurance agency, for any type of business. So a business is a business. There are different levels of structure and ownership and regulation. So the three common buckets, right? You have a small private company, you can have a private equity structure with multiple owners or investors, and then eventually a company can be public, right? If you reach a certain size, you're subject to certain regulations, certain ownership structure. The easy way to find out the value of a publicly traded company is go to Fidelity, go to E-Trade, go to Yahoo Finance. You can type in the ticker and you can see the fair market price right as of now, right? During the trading hours. So if you want to look at Gallagher or Willis or, any other publicly traded broker, just type in the ticker, you can see it. For a private equity company or even a small private company, there isn't a yahoo.com. You can't just type in your agency's name and see what the current fair market value is. You have to engage with someone who is an advisor or knows the trends, the valuation methodologies, comparable transactions, right? Which is something I think we do really well. We've got a great database, that proven track record of transactions we've advised on, to actually see, okay, what is a current fair market value of my company? What are the factors that drive that? And how can I make an impact to those things? And so going through an annual valuation, I like to not somewhat equate to, but it's almost like, going to yahoo.com or yahoo.com and trying to see what your current ticker price is. Is it perfect? Not necessarily, but it's a very, very accurate representation of the current marketplace and the trends. And again, the things you can do to make an impact on that. And so this is commonly for regulations like an ESOP, right? Or companies that have a lot of investors. They routinely go through valuation exercises so that the investors of the company, the owners of the company, can know what the value of those shares are. As a small privately owned company, it is a extremely valuable practice to engage with someone like us, to get a valuation, to go through that process so that you can use that as a business planning tool.
Love it. Hey, Mike, I was going to ask a follow-up to that. And obviously I know that there's a lot of value in doing evaluation to know where you are. And you can use that as an asset and use it strategically for planning and for goals and for just knowing where you are is really important. But what are the top 3 drivers of valuation? So for anyone who's listening or watching right now, who's in a position where they own an agency, they're thinking about valuation, they're thinking about, oh yeah, well, what's my agency worth? Or maybe they have a good idea, or maybe they've gone through that process. what are the three primary drivers of agency valuation so that I know what I know and I can start to chart that path and start really focusing on those areas so that I can optimize those areas to get the most value at the end?
Yep. Can I first piggyback off the last question?
Absolutely.
So going through evaluation, yes, you get a number, you get an idea of the metrics and all that. Really, it's conversation we have with clients after that is the real insight. It's, we're involved in actually getting through a sale process. So we know that, what it's going to look like, how good your financials really need to be to get through due diligence, how good your management system data needs to be, how like the issues that you have with some of your employee relationships, whether it's the agreements you have, like we've got one that we're doing right now, they're paying people under the table. Like there's things that have to be cleaned up before you can actually get through a sale. And so by letting somebody come in that knows what it's going to take to get through that process and having them go like lift the hood and let's look underneath here. Yeah, there's great value in knowing what your number is and what metrics drive it. But you also got to, if you want to cash in, you got to get through the process to close the deal. And so some of the greatest value we give them is like, you got to do this before you're ever going to get through the process. Like, and a lot of times it's their financials are terrible. Their management system data is not accurate. So like, we need to work on that. You can't, like if somebody can't validate your numbers or somebody can't prove all the customers in your book of business, they're not going to pay you for it. Or if there's things that you're doing that are not in compliance with IRS rules on employees and everything like that, you've got to fix that, or we got a plan to fix it. And there's a million little things like that, like producer relationships. I mean, just within producer relationships, like commission splits, is there an agreement, no agreement, so it's all those things that we look at through the process of, here's your number, but let's talk about all these things that you got to do to really get this so you can get through the process. And then, again, yes, knowing the number, knowing how it works, then you can understand how am I going to improve the value if that's your objective. So there's a lot of conversations we have outside of just here's your number. And as we talked about before, there's tax planning. Like we get people that come to us and they're a C corporation and they want to sell. Well, okay, you're organized as a C corporation, so there's a double tax when you sell. So are you prepared to take a 50% haircut off of the sale proceeds when you sell? Because so our objective is always get in front of people early so that we can help them address these issues, because some of the things take a couple of years. If you want to convert from a C Corp to an S, that's a 5-year window before you're going to be treated as a C Corp. If there's data that needs to be cleaned up, that's going to take time. So the value, understanding the value and the metrics that drive it, but it's also all the little things that agency owners have to do to get ready for that actual transaction. So that I just want to make sure we're clear on that, because it's easy for somebody to do a valuation and spit out a number. I'm not understating the work that we do to spit out the number, but it's the other insight that you get going through the process that is of value too. So what are the drivers to valuations? I mean, obviously it's revenue and EBITDA. Those are the metrics that people hear. It's some multiple of revenue, some multiple of EBITDA. And growth sometimes affects that, your growth rate as an agency. But like those are the easy ones. Because you always hear about a deal, I got X times revenue, X times EBITDA. The things the owner should be concerned about is, how am I going to drive revenue? Yes, when you're ready to sell, it's going to be some multiple. How do you drive revenue and how do you drive margin to improve your EBITDA percentage? Because we get agencies that come to us and they're like 10, 15% EBITDA margin, sometimes, not the average. And then we got clients that have a 60% EBITDA margin. Like that's a huge, huge difference. And I'm telling you, unless it's a book of business somebody can absorb, the vast majority of deals are going to be priced on cash flow, because the buyer's got to project out what the ROI is going to be, and that's going to be based on cash flow, not just buying revenue. So, the metrics are revenue, growth, profitability. Those are the main ones.
I kind of look at it as like the iceberg analogy, right? There's those things above the surface that are very obvious, like you just mentioned, Mike. But then there's like below the surface of the iceberg are all these intangibles, these things that you don't always see, that actually make a difference, not necessarily in the valuation itself, but how because I guess the other thing I'm thinking about is how attractive is this agency's book of business for an acquisition. It's not just the numbers game. It's also these other things that you're talking about, these intangibles. It's relationships with producers, how their contracts structured, what kind of niche are you in, right? I'm sure that $1 in one niche is not worth necessarily $1 in another niche, because it just depends on those factors. So what I'm hearing you guys say is there's so many different factors that go into, it's not an exact science, but there's a lot of different nuances, and it really depends. Are you working with more of a strategic buyer?
Well, that's what I was going to say. You can't discount the value of the eye of the beholder. Like, it's your value to this buyer is one number, your value to this buyer is a different number, and there's a world of buyers that are out there. So one of the greatest values we bring is that we take clients to market and we go, let's have you talk to all these buyers and find the one that sees the highest value. I mean, because it doesn't matter what somebody tells you what it's worth at the end of the day. It's what you actually get when you go to sell. And so I can tell you it's worth this, but you go and sell to somebody else and get a different number. Every buyer sees a different value. Like, we can't understand. And then the terms of the deal, can't say how many times there are certain buyers out there that like, oh, you're going to get 15 times EBITDA. And then the clients, I'm going to get 15 times EBITDA. Then you look at the deal and it's 6 times EBITDA cash. And oh yeah, if you grow 15% and our stock price grows 15%, you're going to get 15 times EBITDA. I'm like, you're not going to get 15 times. That's a 6 times EBITDA offer,
Yep. So I have a personal question for you. If you can answer it, if you don't want to. I see you guys more as the, as I'm getting to know your model and what you guys are sharing today, I kind of see you guys as like the maestro of the orchestra, and you guys are really kind of dictating the tone and the feeling and pretty much, or like an architect. You're really architecting the whole thing from A to Z for an agency owner, as well as connecting them with the right potential strategic buyers. Is that accurate to say that you guys kind of handle it from soup to nuts, from the time someone comes to you and says, hey, I want to do a valuation, I'm thinking about this, or hey, now I'm ready to sell? Do you guys kind of walk them through step by step that whole buyer journey?
Colby, let me chime in first. I know we're exceptionally good at M&A. So our job is to take clients to market, help them find the best offer with the best buyer for them, the one that they like the most, help them negotiate the offer, help get the deal done. Yeah, we consider it being like a quarterback, but it's in the presentation of the information. It's in, we do our own due diligence on our client before we go to market. We put together a really nice marketing packet. We go out to a pool of strategic buyers. We're trying to match up each client with the right buyer that makes the best offer, has the best chemistry with their client. We're really good at that. We've been doing that for a long time, and that's our expertise. I brought Colby on board because we would do valuations for clients and go, here's all your issues. Okay, go fix it, and we'll see you in a couple of years, and let's hope you fix it. Mm-hmm. We were looking for a solution. How do we help plug in and help them get through those through the things that need to be fixed? And that's Colby's background and expertise, is working as fractional CFO, working as a consultant. And so, M&A, I'll say we're the best. Like, I really believe that, because I know the competitors, even the ones that people think are better than us. I think we are the best. But our objective is, we don't want to just on the exit side get our client the best deal. It's now we want to get into the weeds with them. Let's help you along the journey, so that way when you do exit, you get the maximum value. And let's get all the things cleaned up and get you moving in the right direction. So that's a big reason why Colby came on board with us, is to help our clients through the longer term process of getting prepared for that and maximizing the value.
So I look at that as how I'm understanding that particular service, Mike, is it's kind of like you have all this stuff that you need to really clean up. You like clean up your house, make it more attractive to invite guests over, and
paint the house.
Colby's the go-to guy to pretty much say, hey, we're going to help you accelerate that process, because we're going to put this in place, this in place, this in place, and this in place. And then you guys are going to execute, right? So you're going to execute on these things that we're recommending you get. It's going to help you get to where you want to go faster and easier than before, so that you set yourself up for success. And because I know how it is, leave it up to everybody else to clean up their own mess, or even to optimize or make their businesses better. working with the coach, working with a consultant, working with somebody who has that experience hand in hand with them and helping them guide along their journey is way more effective and way more valuable, because you're going to help them get there faster and easier than if they were just going to kind of do it on their own.
Well, I mean, you think about, we all, you run a business, I run a business, all our clients, they run a business. You know what you do, you know what works for you, but you don't have the benefit of having looked at hundreds, thousands of similar businesses to see the best of each one and what's the, how things can be done differently, what things how you should make changes. So our firm, we look at hundreds of agencies every year. So we see the good, the bad, the ugly. And, Colby's been in the weeds. He worked at a large national broker dealing with a lot of programs and producers and all that stuff. If you're a business owner, you're like tunnel vision. And so you may not know that you can do it this way, or you may not know like some of the things that are out there and how things that can be done to make it changes. And so bringing in somebody with a broader view of things can help you open your eyes to those. And I want to touch on I said we sat down, we looked at what are the things that are inhibiting agencies from growing and inhibiting values. I said owner dependence was a big one. For a little while, it was no growth. Agencies that don't have a growth strategy, they're not marketing, they're just, everything's referral, and so they're stagnant in growth. We can't solve that problem, but people, we refer them to people like you that can help get in and say, let's come up with a strategy to fire up the growth. That would be for a client has a longer window to exit. If they come to us and they're ready to retire in 2 or 3 years, we're not going to move the needle very fast on something like that. The other thing is they have bad financial data, like we talked about. Their books are a mess. They don't have regular P&Ls every month. Their management system data is bad. Those are the kind of things we can help with. And then one of the other areas is bad sales management, is what I call it. Like their producer relationships are different producer to producer. One has this commission split. One owns his book of business. There's no agreement with this producer. That's one bad sales manager. The other is you look at their book of business and it's a shotgun. Like, the spread is across a whole bunch of carriers because nobody's saying, hey, we get 15% with this carrier. Can we try and tell the clients how great that company is? It's just a shotgun approach to sales. And so there's again, no owner dependence of the business, no growth, bad data, and bad sales management. Those are the 4 issues that we see that are inhibiting growth, inhibiting value creation. And so, in most cases, we want to provide a solution. So it's either we'd refer them to somebody like you, they need help with strategy. In this case, we brought Colby on because it's like, if you need your financials and your data cleaned up and you need to set goals to get to certain metrics, you got to have somebody that's going to work with you on a regular basis to achieve those goals. So that was our strategy based on our observation of the problems.
I see an incredible opportunity for creating some awesome content around the top 4 things that are inhibiting your agency growth. Like I just came to me, Mike, as you're talking like that, is like creating the ultimate best practices white paper or checklist. Like, guys, these are the things, if you're looking to sell or you're looking to exit, these are the top things that we would recommend as something you should consider if you're considering selling or if you're considering growing your agency. Here would be our best practices kind of checklist based on all of the experience of working with thousands of agencies and knowing what the best, highest performers are doing. We have that expertise and knowledge. We can impart that on you. And that's kind of how I see you guys, as an incredible resource, not above and beyond just valuation, but just the vast knowledge and experience that you have and perspective. That is probably the most valuable thing of all, is knowing who you've worked with and having that knowledge base, that knowledge source. That to me is the greatest asset of any business, is that knowledge.
I did a webinar for the PIA titled Building Long-Term Value in Your Agency. And it was really good. This is based on me thinking about these things for a long time. But there's a couple of things in there. So I talked about the 4 issues. I talked about the 4 types of owners, and you go from the technician to the rainmaker to the serial entrepreneur to what I call the empire builder. And they're different personalities. I could share those slides with anybody that wants them. It's understanding you have to change your mindset and your focus. Most agency owners start off as either like a technician, they're selling the policies, or they're a rainmaker and a producer. Is you want to grow, you got to change your mindset and your focus to scale the business. So that's one of the things I talked about. Then I talked about the 4 pillars of value creation, which is strategy, systems, culture, and finances. And I went through each one of those and kind of just highlighting the things. But if you understand that you have to grow and you have to change your focus and advance your skills to grow with the business, and you understand that those are the 4 pillars of your business that you have to have in place, the other problems get solved. The owner dependence, the bad financials, all the problems get solved. But you have to first step back and say, okay, what am I doing wrong? What do I need to fill in? Like, is it something I need to learn, something I need to refocus on? Or, do we need to put effort into building a culture, into what our strategy is? But do things the right way, the problems go away.
I love it. And that's Colby. That's why you are such an incredible asset with Mike and and the firm in general, is you're able to provide that expertise and knowledge and experience to be able to say, okay, guys, here's a bird's eye view of what's going on. We need to tackle this, this, and this in order to help you get to where you want to go faster and easier than ever before. So,
well, I'll go ahead and plug too. So our website, we've got plenty of great articles that Mike and the team have already put together on different myths or different things that actually point to what you're asking. I'm starting to put up a few articles. We have some webinars hosted on our site too that are extremely valuable. So there's definitely content there. Sign up for our newsletter because we send out a monthly blast of the stuff that we put on there as well. But yeah, I'll go ahead and call it. Mike has done a fantastic job of sharing a lot of that information already, and we're going to continue to do so.
Well,
you guys are awesome.
I'm an engineer, so I'm pretty good with numbers. Colby is a wizard with financial modeling. And so in that, it's helpful, like trying to modeling employee comp plans and different things like that. And so I'm excited that he's, on board with us and we're able to do these things for clients.
And I agree. You guys are a 1-2 punch, and it sounds like you have a great team and just a great overall view of how to truly optimize and maximize agencies, their growth, their strategy, their execution, their finances. I mean, when you look at that, it's like the full picture. And so I feel like this is like one of the best episodes ever. And I just think you get a bunch of nerdy engineers in a room and it's amazing what, and I knew that, by the way, Colby, I knew that from the time I met you doing those industry roundtable discussions. I was like, dude, this guy is so freaking smart and knows so much about this industry and is just an incredible
He's humble. He's over there going like this, but he is.
I think I've been extremely fortunate to have the career that I've had, because in less than 12, 13 years, I worked in a really good agency. And so I had the gift of having good people who led me and were mentors, but also shared a lot of those valuable things of the agency with me. And so I think I was just fortunate to be at the right place at the right time to land that job. And from there, I was just immersed in a lot of this stuff as part of my normal job and learning this industry. And so thank you. I appreciate the compliment. But for me, that's just been what's normal, right? Is learning what makes a good agency run and then how I can try to share that with other people.
Yeah. And you're also a competitor too. I can see that in you. And I can see you're just a sponge for more knowledge and more information. And you're so giving with your knowledge and information. And I think that's what truly makes a pro. And that being said, here's my final question for you guys is I think the next episode I want to talk about is how freaking amazing this industry is and how we need to get the younger generation excited about. I mean, imagine all the different experiences you guys have with working with so many different types of agencies. You guys have seen everything, but man, wouldn't it be awesome to continue to drive that talent pool into this industry and see more successes and see people winning and really building amazing businesses from scratch to wherever it is they want to go. I don't think there's a better vehicle or better industry model that can help somebody truly do that and have such an amazing experience helping and transforming businesses, because that's what the way I look at insurance. You have the most influence of pretty much anybody in their sphere of trusted advisors. As an insurance broker agent, you have so much influence in protecting that business owner and protecting their value and protecting their futures. Most people don't realize how influential we are in terms of the influence in the business world. So I think what you guys are doing is amazing and helping so many other agents be successful. Here's my final question for you, because I see this as just the first episode of many that we can do together. I want you guys to think forward, kind of thinking into the future and you're sitting there on a beach and you're retired and you're reflecting back on your career. And Colby, we'll start with you. I want to end with Mike, his position on this. What do you want people to remember you most by? Like, what do you want your legacy to be?
My first mentor in the industry, the guy that hired me at Regions Insurance. I will never forget this. The day he interviewed me for my internship, he said, I want people at my funeral, when they come, to be able to say, my life is better because I met him. That can mean a ton of different things to a lot of different people, but I've always held on to that. And so I think I'll probably answer with that, right? I want people to be able to say their life is better because they met me.
Love it.
How do I compete with that?
You can't. No, you can in your own way, but man, that's powerful. It's really powerful. Mike, how would you answer that question? Even if it's the same, because I think in general, I've asked this question of dozens and dozens of really, really smart people, aspiring entrepreneurs, successful entrepreneurs, and everybody in between. And I pretty much get the same answer. And it's never about money. It's never about building an empire or having all this wealth and fame. It's really about people and the impact you can make. And I'd love to hear your thoughts on that, Mike.
Yeah, I was thinking the same kind of answer, but I wanted to help people be better than they are today, right? So I'm writing a book. We can talk about that some other time, but I like to learn. I like to figure things out, whether it's about how systems work or people and everything. And then I like to share that knowledge. So along the same lines, I want to help other people grow, and I want to have an influence on people so that way you're remembered long after you leave this world.
Yep. I love it. Well, by the way, you can't just drop that bomb about your book and not say, at least tell us like the thumbnail version of
we're already over.
Yeah, we're already over. But it's good. I'll say that. It's good.
It's about how we talk to each other. It's kind of the bottom line. It's thinking of, you can decide if you want to keep this in or not, but it's thinking about the challenges that people have communicating. And I boiled it down to a couple of things. And I came up with what I call 5 rules of effective communication, which is be direct, be positive, be respectful, be selfless, and be clear and concise. And so I'm going through talking about why we struggle to communicate. The solution is follow the 5 rules. And I go through a lot of examples. And then I go into the mindset that we have that causes us problems. So it's, our personality, our focus, our mood, the things that influence how we actually behave when we interact with other people. So it's totally unrelated to what I do, but I think it's a book that will end up helping a lot of people.
But is it really? Now, come on. I could think of this. The last one that you mentioned was be concise, and it's something that I am really not good at all. I'm actually quite chatty, and I don't know when to shut up. And I've been told that I need to shorten my emails down to like a few sentences, not paragraphs. I agree with you though. I think I'll say this, and we can decide to leave it in or not. I think I love this raw. You just see where the episode brings you. Just see what happens from it, what creates from it. And I think what it does is it creates a new stepping stone and a bridge to the next conversation, to the next relationship, to the next thing, whatever that thing is. And I think, Mike, what you bringing that up has so much value to people in general, because I always look at it, the golden rule. The golden rule that I have in business is always what my mom taught me, which is like, do unto others as you want someone to do unto you. And a lot of that has to do with how we engage and how we communicate. And so I love that foundation for your book. And I think it has influence in every type of business and every type of person. So I think it's extremely valuable, and I'm looking forward to it.
It's that last one's be clear and concise. And then in parentheses, I have and be or memorable, or and memorable, because, to the most, you really want people to remember the things that you say. And so the four traits that I said that are cause difficulty with communicating is people that don't talk enough. That, it's like pulling teeth when you talk to them. People talk too much. It's like drinking from the fire hose when you talk to them.
Me.
People that are too aggressive, where you feel like you're in a boxing match after you have a conversation with them. And the people that are too sensitive, where it's like walking on eggshells when you talk to them. And it's pervasive. We all struggle. We all struggle with this in different ways, different periods of life. It's not an age thing. It's not a education level. It's not a culture thing. It's just human nature. Like, we have different personalities. But the problem is if you are engaging in conversations that way, you're limiting the respect and the love that you get from people, because you're causing, if you're aggressive, you're causing hurt, you cause avoidance, you cause frustration, all these things. And so the objective is, if you can just improve a little bit, you'll actually improve your relationships and the love and respect that you get from people, because you're becoming a better conversationalist with others.
God, I love it. I love it. And I said this I think I said this to you, Colby, and we'll end it here. And I'll just say this: the reason I do what I do with these podcasts, and I have no idea if it'll ever turn into something. It's like, it's not in my thought process right now, but I love it so much that if I thought about this for the other day, what would you do? And this is just me. This is my position. I have quite a foundation of faith. I'm a faith guy. What would you do if God told you today, like, you could do one thing and you would never fail at it, and it would be something you could do for the rest of your life? What would it be? And for me, it would be doing podcasts and interviewing amazing people like you guys. Like, to me, and then sharing that with the world. To me, that's the greatest thing I could do. The greatest value I could do is to meet amazing people like you, to share your message and get your message out there and your value out there for all the others to get the opportunity to experience. And that, for me, would be the greatest thing. If I could get paid to do this full time, I would 100% do it. But you guys all know there's a lot of competition and podcasters, and I'm not anywhere where I would love to be, in terms of how good I am at this. But every day I'm getting better. Every day I'm iterating and trying different things and just trying to improve how I'm able to be of value to you guys too. And I think that's why we do what we do. And I think that's a great way to end. So guys, how can we, if anyone needs to, or if anyone's looking to connect with you guys and potentially look into how they could work with you, what would be the best way to reach you?
I was thinking, we're both active on LinkedIn. If you go to our website, agencybrokerage.com, you can reach out to us there. It's pretty easy to get in touch with us. And we're both, I'll say personal guys, but we'll talk to anybody. So reach out.
That's awesome. And I'll put all the links in the description. I'll put all the links to reach out to you guys, email, website, etc. But you guys are really active on LinkedIn. And I think LinkedIn is a gold mine right now for anybody who's listening. Definitely go out, start engaging with people and communicating on LinkedIn. It's just an amazing platform if you use it the right way. And guys, I'm extremely blessed and honored to have you on. I know we went over, but man, this has been one of the most amazing episodes that I've ever, and interviews I've ever done. And I truly am grateful, and I appreciate you both. So thank you.
Thank you.
Well, thank you.
All right, guys,